If you retire early and start receiving Social Security benefits and you continue to work, can it reduce your monthly benefit? It is possible that it could. If you retire between the ages of 62 and your full retirement age, you're subject to the Social Security Retirement Earnings Test. I'm Beverly Harzog, and I'm going to explain the new 2026 Social Security Earnings Limit. I covered the limit in 3 different situations. And yeah, the limits and rules are all different. I don't know why they make it so complex, but they do. First, let's talk about what type of income counts and what doesn't. That's important to know too. After you reach your full retirement age, known as your FRA, you're not subject to the earnings test anymore. You can make whatever you want. If you aren't sure of your FRA, well, it depends on the year that you were born. If you're born between 1943 and 1954, it was 66. If you were born between 1955 and 1960, your FRA increases gradually until it reaches 67. For example, I was born in 1957 and my FRA is 66 and 6 months. If you were born in 1960 or later, it's 67. The annual earnings limit for 2026 is $24,480, which is an increase from $23,400 in 2025. Now, there's something I want you to know about the earnings limit, and I want to be really clear about this because it worries people all the time. This income limit is per individual. If you're married, your incomes are not combined. You each get that limit, even if you file a joint tax return. So, what counts as income if you retire early? The Social Security Administration counts wages from a job, net profit if you're self-employed, bonuses, commissions, and vacation pay. The income that does not count is an employee's contribution to a pension. I get asked about pensions a lot, so that does not count. Annuities, investment income, interest, capital gains, veterans benefits, or military retirement benefits. Now, just a quick note. There's a category called special payments, and that includes things like back pay, vacation pay, or sick leave that you might receive after you leave your company. This type of income counts when it was earned, not when it was paid to you. So that's good. If you're planning to retire early during 2026, the Social Security Administration has special rules for you in your retirement in the first year. I'll explain how that works next and how it also will impact your earnings limit. The special earnings rule is for those who retire early but have already made more than the earnings limit for the calendar year. This rule is tricky, and it's important to understand it so you don't lose money. I don't want that to happen to you. I have an example to clarify how it works. Let's say you're 62 and plan to retire on July 1st, 2026. Since you'll still be under your full retirement age the entire calendar year, the SSA considers that your first year of retirement. Let's say you worked from January through June of 2026 and you earned $50,000 during that 6-month period. You retire early on July 1st, 2026, and your Social Security benefit is $1,000 a month or $6,000 for the months July through December 2026. The annual earnings limit for 2026 is $24,480, but in the first year, the earnings limit is applied on a monthly basis, which comes out to $2,040 a month. The special rule says that even though you made $50,000 and exceeded the annual limit, they'll let you keep your Social Security benefit for July through December 2026, which, as I mentioned, is $6,000. If your earnings each month are $2,040 or less between July and December, and you did not perform substantial services in self-employment during that time, then you qualify to keep that money. The second part of the rule that refers to substantial services, this is defined as working more than 45 hours a month in the business or working between 15 and 45 hours a month if you're in a highly skilled occupation. I will add a link to the description that goes into more details about that, if that applies to you. So the first year has a monthly limit. But in the second year, it changes again to an annual limit. And that makes it a little easier. I'll show you how that works next. Okay, in this example, let's say January 1st of 2026 actually starts your second year and you're still under your full retirement age for the entire year. Your Social Security benefit is $12,000 a year. We're sticking with $1,000 a month. You earned $40,000 during the 2026 calendar year. We subtract the limit from your earned income to determine how much you made over the limit. And so we take $40,000 and we subtract $24,480, and we get $15,520. And since you don't turn your full retirement age in this year, $1 is deducted for every $2 that's over the limit. So $15,520 divided by 2 is $7,760. In 2026, you received your Social Security benefit of $12,000 over the course of the year. So we subtract the penalty, $7,760, and that leaves you with $4,240 that you get to keep for 2026. Okay, this is where I get to give you some good news. You saw an example where benefits were withheld going over the limit. That money isn't gone forever. The SSA will recalculate your benefits when you reach full retirement age. Your benefit gets adjusted to give you credit for months when your payment, was either reduced or withheld altogether. And I know it stings to lose that money right now, but unfortunately, that's how it works. The third and final scenario, you waited to retire until your full retirement age, but it means you retire sometime during the year. So how does that work? Yes, there are new earnings limits and new rules for that year, but they're much higher. So that's great. In the year you reach your full retirement age, you get to leap from $24,480 a year up to $65,160 a year. That's $3,000 more than it was in 2025. So there's that. And since it's your full retirement year, you don't lose as much money. Here's how it works. Okay, let's say you reach your full retirement age on July 1st, 2026, and you worked from January to June in 2026 and you earned $70,000. To get the over the limit amount, take $70,000 and subtract $65,160 to get $4,840. And since it's your full retirement age, you only lose $1 for every $3 over the limit. That's a little better. Your Social Security benefits for the first half of the year, January through June, would be $6,000, 1,000 times 6. Subtract $1,613, and your Social Security benefit for the first half of the year is now $4,387. There is a light at the end of the earnings limit tunnel. Once you reach July 1st, you're at full retirement age, and you're no longer subject to the Social Security earnings test. You can earn whatever you want at this point. But before you get too happy, there's one more thing I need to tell you. At your full retirement age, you really can earn to your heart's content, make as much as you want. But if you make over a certain amount, you might have to pay tax on part of your Social Security income. So just remember that, keep that in mind. And just a quick note, this video is for the 2026 earnings limit. So if you're watching this in a different year, the limits do go up annually. If you'd like to know more about how Social Security works, I've created a playlist and the link is on the screen. If you have a question or you want to share your own experience trying to get through all this, please do leave a comment. Thanks for watching, and I'll see you at the next one. Bye for now.